whole last 1 month talking point on banks. Now, SVB, Credit Suisse, the Fed narrative changing, Swiss National Bank coming in. Are there lingering impacts to all of these, or will these be ring fenced in a manner of speaking?
Neeraj, absolutely. I think there is a crisis unfolding in the global markets, and the flows will not be immune to it. So that, to some extent, will impact us. However, having said that, I think you have to see where the genesis of this crisis lies, and I think a lot of it is in the fact that during COVID times, the developed world did not do a good job of both health crisis and the financial crisis management. They overstimulated the economy, and that led to a crazy increase in inflation. For them, for 30, 40 years, they have never seen 6, 7, 8 double-digit kind of inflation, and that's what they are witnessing. And I think that led to, of course, the kind of response from Fed in terms of increasing rates, and that is now, see, if Fed is going to increase the rates the way it has, 4 percentage points, 4% points over barely 6, 8 months, then surely that is going to break something, and we are starting to witness those things breaking. So SVB was just probably a flash in the pan, but eventually it is now moving to other shores as well, and this still remains a liquidity crisis. It can become a solvency crisis for some of the Western world economies and the banks over there, banking system over there. The only difference, I would say, as compared to the global financial crisis, is that this time around the playbook is kind of known, and of course the central banks will use the same kind of playbooks, and the response times are much, much quicker. As we have seen the last weekend, we saw the SVB depositors being bailed out, and this week we saw the Credit Suisse and the UBS merger being pushed through, and of course the coordinated action from the central banks in terms of providing liquidity to the world. All these actions are making the point that we have a problem, but the response to that problem is also quick. Now, coming to India, I think India did a brilliant job of managing COVID, both at humanitarian and health crisis level, as well as at the fiscal crisis level. Now, some might say that it was because we didn't have the resources. Surely, that did not prevent previous governments from overstimulating or printing money, or when they did not have enough. So their credit is deserved that we actually did not balloon our deficit way too much. Our inflation is not running as hot as the developed economy. Our currency is far more stable. Our banking system is in a much better shape. So all that is making India actually an oasis in the world. Having said that, the global flows are going to be impacted, and if a fund is getting impacted, back in US, they are going to get out of assets which are providing them returns and liquidity. These are not decisions that are being driven by the fundamentals, but they are being driven more by where I am hurting and from where I can get the liquidity that I need, or where is it that I can lock in my gains so that at the end of the quarter or whatever, at the end of the year, I can show returns. So those are the kind of things that are driving the actions and not the fundamentals. I think India is an oasis in the world in that sense.
So are you fearful currently? Are you cautious, or are you greedy?
So the time, obviously, to be careful was probably 15, 16 months back. We have had 15, 16 months of no wealth creation. Yes, we have been going up and down, up and down. It's been a consolidation correction. And now we are reaching a stage that this correction consolidation is culminating into a full-blown panic, probably. The local domestic investors have not panicked till date. But I can't rule out one panic over there setting in. Some amount of that is showing in the way the SIP flows are probably beginning to recede, or the rate at which it was growing is receding. And so FIIs will probably end up, they have already sold out of probably net $40 billion. And I think their value in the holding of overall is now down to less than 17%, as I understand, and that is historic low. So from FII perspective, their holdings are at historic low in terms of percentage of the equity of the market, and the short positioning in the futures is also very, very high. So they are clearly positioned to sell or create liquidity. That will reach an extreme point and we will see a bounce back. How the domestic investors react to that, I think on the way up, probably they will also start, feeling the pinch. But till now, it is still a pretty much a global crisis which is impacting the markets to a limited impact. There is no such economic impact over here as of now, or the impact on the financial system. So I am not worried beyond a 5-10% correction from here.